One, two, three, we live, baby. What's really good, family? Happy Sativa Sunday and welcome back for your favorite Sunday stock market prep show, fundamentals, technicals, narrative, economics, all that good stuff, man. I'm your host, Zay, the wealth strategist, and I want to welcome you all to Sativa Sunday. When retail FOMO turns into fear of loss, aka FOMO, right? The Consumer Health episode 36, y'all. And let me tell y'all, I'm trying something a little different tonight. I've been listening to some mellow vibes. I'm gonna be cool, calm, and collected tonight when we go through this presentation. I'm gonna try to contain the passion and really make this a teachable moment tonight, right? And we got a lot to catch up on, right? So if you're new to the show, definitely drop a comment. Let me know where you're tapping in from. If you are a returner, definitely drop a comment. Let me know where you're tapping in from. But if y'all don't know, I usually like to lay out my agenda. So of course, you already know we're going to recap last week. We're going to get into this week. And, I'm going to go through some indicators. I got a new one tonight, y'all. So listen, when I say I went back to school this semester, I've been learning some stuff. So I'm hyped because I got a lot of tools in the bag. So I'm going to share with y'all a new indicator that I found and learned about. Of course, we're going to do the technicals and all that good stuff. And y'all know we're going to pull up the assignment board and do what we do. So, that's how we rock. Now, before we get into the episode, though, I got to give a big shout out to all my runner family and my Patreon family. Because boy, oh boy, did we eat last week, man. It was rough to stand tall in the face of the bullishness. When I told everybody I was going to the Sell to Rip camp, they said, Zay, you crazy. But I said, I believe in myself. I believe in what I see. And we're going to get into all that, man. We're going to have a good time, man. We're going to have a good time. So like I said, if y'all don't know, I do have an awesome community. It's called the Runners Community. It is a all-in-one community: personal finance, long-term investing, trading, psychology, book club, health is wealth initiative. I mean, you name it, we kind of do it, man. The link is down in the comments if you want to join. And if you're not by the community life, you just want to just get info straight from me, you know what I'm saying, and just support me. That's what my Patreon family is all about. But I look out for both, you know what I'm saying? So shout out to them. Also, got to give a big shout out to CANNIBA, the premium cigar hemp company, who is also a sponsor of Sativa Sunday. Always got to show them some love. So if you go to their website, use code Sativa Sunday, you get 10% off. Make sure it's all capital letters. And it is CBD. So shout out to all my small cigar smokers, man. And shout out to my boy David Boom. All right. And last but not least, I got to pull this comment up because this is what I need y'all to do. I need y'all to hit that like button. I need y'all to hit that share button. Definitely hit that share button, man. We got to get the viewership up, man, because I be giving some good game. We need more people watching the show. And then I need y'all to, like, share, and, of course, subscribe if you already haven't subscribed. So, but shout out to my boy Dre, the moderator. Let's go, family. Happy Sativa Sunday. Ready for another great one. Hit that like button and salute. So now I'm going to go to the comments and show y'all some love, man. My guy Brian was number one in the chat. He said, let's go. I appreciate you for tapping in, my guy. Silent Gainer, what's good, dog? How you doing, man? We be chopping it up on Twitter and all like this. Hey, my dog he be winning, bro. You be posting a lot of wins. I noticed that. Good stuff, brother. I be seeing you 3 for 3, 4 for 4. I'm like, my man's be eating. We got Black Swan in the building. How you doing? I can't tell what kind of emoji that is. Kareem, what's up, y'all? How you doing, Kareem? Appreciate you for tapping in, my guy. Alonzo, what's good, man? How you doing? He said, what's good, y'all? My brother, what's good? We got Mike Wyckoff, the Wyckoff method from Hawaii. What's good, man? Hawaii gang. I appreciate you, man. I appreciate you. We got Michelle Tucker in the building. Hey, family, how you doing? Tapping in from St. Louis. I appreciate it. Hey, Miss Baylor, she said, hey, Zay, happy Sativa Sunday. Stock Traders Almanac, mid-August rip. Well, we are going to talk about it. We're going to get into, look, I'm going to lay out my bull case, my bear case, and I'll let y'all, see the data and pick your side. Growing Up Jamaica's in the building. Good Sunday evening to all from NYC. Good evening, Growing Up Jamaica. I appreciate you for tapping in as always. And Benson, not sure how to pronounce that last name, but I'm gonna just say Benson, my guy. What's popping? You're appreciate it. And that was the salute emoji. My guy. And Alonzo say, I'm calling relief rally too, Miss Baylor. Awesome. All right. I love the bullishness, guys. We're going to get into it tonight. All right. So we are now 5 minutes into the show, and y'all know that I like to try to keep this to an hour. Now, listening to my mellow vibes, I'm going to take my time because I don't want to rush. Like I said, I really want to make sure tonight is a really great episode. So with that being said, we're going to get right into where and what did I say last week and how did it all play out, right? So the main thing about last week was that it was inflation week. And I told y'all, I said, listen, in light of recent news and a shift in investor sentiment, that in the short term, meaning from August to September, I had crossed over to the sell to rip camp, meaning any green days was going to be used as profit taking, and that we was probably on the cusp of the summer fall correction of about 8%, right? I'm on record. Well, I watched the episode. I can't fall back on what I said. And so with that being said, we're going to go ahead and get into this week, okay? Let me share my screen. Growing Up Jamaica says, Zay, I like that hat. Appreciate it. Yes, shout out to all my fathers, all my active fathers out there, Dad Gang. I love this brand. They have a great brand of hat. I ain't gonna front you. I have like probably 13, 14 of these hats. Like they got different colors. That's why you pretty much see I have one on every episode. I got a different one for every episode. Tonight I wore the camo because I felt like we going to war, baby. I'm ready, baby. I want a camo tonight. All right, so I got the board up. Let me get my notes up. So I said what I said. Is the stock market too complacent? Okay, yeah. Let me just go to the performance, right? So overall, right? Overall, the market was down. Basically negative 0.31%. And we're going to get into just, the performance, right? So that was, it was basically down, but that wick is pretty nasty. And that was a lot, there was a lot of sell pressure in these wicks. And, if we go to a daily, and we're going to really bust down the technicals later, but, heavy resistance here. That was another trap. On Monday, I tweeted, Bulls, you got your bounce. I hope you got out. And then, they kind of ran some stops here, but that was a nasty wick rejection. And then, they're like, oh, yeah, the sellers couldn't push price down. When in reality, I just don't see buyers being able to push the price up. And when they do push it up, sell the rip. So that was the SPX. If we go look at the NDQ on the weekly performance, it was down 1.62%. And then the Dow Jones was up, basically up. Well, it was up, right? Up 6.62%. So the Dow, right, that rotation into energy, utilities, healthcare, like the defensives is what held the market up, right? And again, that was something we talked about. I'm telling y'all tonight is going to be so good. And then, of course, the IWM, the small caps. This concerns me because remember, I was, early on, I told you, like, watch out for the small caps. If they rally, that could be good. They're starting to break down. So that could, spell some signs for, the economy, right? Because we talked about how Russell 1000 kind of represents more of the economy. And so that is pulling back. Now, it's pulling back at a critical resistance. And again, we're going to get into the technicals later, but just wanted to point out weekly performance. And so, yes, the IWM was down 1.64%, right? Now, let's get into some of the factors that led to these down week, or this down week, right? So shout out to Wells Fargo. I'm going to use their weekly article that they published to really highlight inflation week, right? So the big item for this past week was really just inflation. So I'm going to spend some time on inflation and the impact of these inflation reports, right? Now, if you didn't watch last week's episode, I would definitely recommend you to go watch it because I did talk about what I needed to see in order to believe the bulls would be able to retake the market from CPI. Remember, the expectation was that we would come in at, where is Forex Factor? Yeah, I want to show this. So the expectation was that we was going to come in at 3.3. And I talked about how the expectation was already for an uptick. And it was like, okay, it's really a battle of how, if this thing come in hotter, how hot? If it comes in cooler, how cool, right? And what would be the market reaction? And I talked about it. I said, yo, in order for me to believe that bulls will be able to retake this market, I would need to see this CPI not only come in line, I really prefer the 3%. It wasn't 3%. It wasn't really hot. It was it was okay, right? It was 3.2, right? And the reason why I say it was okay is because really it's the headline is it wasn't as high as expected, but the core is still sticky. So that was 4.6 versus 4.7. So it came in at 4.7. And we all know that the Fed's decision-making process is based on core. So core is still sticky. And if the CPI uptick, right? So we go look at our graph, and like I've been showing for a while, we finally got an uptick, right? So if I go to the board, right? Remember we talked about this. Inflation remains elevated. Let me zoom in a little bit. Inflation has been on a consistent downtrend. What happens when we get an uptick? How will the market react? And this is a graph that I got from June, right? And this is when we was at 5. So you can just see the progression from how we've been tracking it to where we are now, right? And so if I go back to Forex Factor, you can see it was just steady going down. And now we got this bounce, right? And like I said, the headline number is like, okay, it wasn't too hot. So perfect article. Let me show you guys because I'm going to show y'all the words ain't going to come from my mouth. But if you look, this is what the media and narrative went with. I'm going to use this. It said July inflation data shows convincing signs price pressures easing, taking heat off the Fed. That's what they running with, right? I got to sneeze. 1 second. Whoo. That's what they running with. So because headline wasn't as hot, they pumped out, this saying, hey, it's taking the ease. But really, when we look deep into it, you can see that core is still sticky, and that this is these, and I mentioned this in the one episode that the 3.0 CPI report we got was probably the last CPI report that we would get that was good. From here on out, more than likely we're going to start to see upticks in the CPI reports, right? And here is the first of list of reasons of why I believe we're going to start to see more upticks in CPI, and that this August report was just the start of our bounce, right? We've been talking about when we gonna get a bounce. We're gonna probably range. We're gonna range, I don't know. Maybe, we could go back up to 5, we're gonna see, but I definitely think this is the bottom. This is the pivot. And inflation is about to slowly go up. And let me tell you why, right? Because I always like to back up everything I say with facts or with data, right? So first thing is, while CPI came in cool, PPI came in hot. Now, if you've been rocking with Sativa Sunday forever, remember when I talked about how if CPI, how they like to play games, if CPI and like how they position it. If PPI come first before CPI, expect something. And if they flip-flop it, PPI is going to be like, it could be a dud or however they usually play the games. I forgot how I said it, right? But the point is, this week we got PPI after, and it was hot, right? So what that impact is, right, is ultimately they like to use, and I don't think I'm gonna be able to pull up this article because it's due to it's on my CNBC Pro, but essentially they like to use wholesale prices as a projection for the next CPI report because wholesale prices are impacted faster. Like the businesses are going to see inflation costs faster, right? So What does that mean the market is doing? It's a forward looking mechanism, and it always likes to price things in ahead of time. So therefore, when the PPI report came out and it was hotter than expected, best believe the market is about to start pricing in a hotter CPI report for September. That's number one. I ain't even get into that. Remember how we talked about when it came to the oil, right? And how the gas prices and all of that, right? So the commodity resurgence, right? Man, y'all, I have been doing some research and listen to this, man. You got oil prices surging to 4-month high after cuts. You got another oil thing that was talking about gas prices are higher again and hitting the consumers directly, right? And very profoundly, right? Not to mention, just the other day, I realized gas is $4 in back in my neighborhood. You know, I had somebody post that in California, it's like $6-7 a gallon. Like, what the blah, bro? That's crazy. So gas is going back up, right? And we probably should fully expect to see that in the September CPI report. Not only that, you got other commodities going up. So you got global rice prices surge to 12 years high. That's the food, right? You got watch out for nat gas, extremely cheap and hated and undervalued. I got that from I was watching a podcast and they was talking about that. So I just put some notes in there. That's some of my own personal stuff. But all in all, commodities and energy have been resurgent, and as you can see, that's going to be a headwind. So expect to see that in the next CPI report, right? And because we saw people, so you got energy prices going up, right? You got energy prices going up. You got PPI that was higher than expected, and then last but not least, another reason why we could possibly see the CPI go back up again is because housing prices, right? The housing market has been resilient, and people have been buying houses again. Prices been going up again, and so that shelter was a main sticking point in the stickier in that core inflation. The shelter was something that was really impacting the core inflation, and that's making stickier. And so if the housing market was heating back up again, that's going to be data that we can kind of use to say that's going to feed into that to say, okay, well, damn, this inflation is going to be a little bit stickier. So it's going to be hard for inflation to crack below that 3%, right? To essentially get to the Fed's target of 2%. It's going to be really hard to get below that 3. So from this point forward, and the month over month comparisons get harder, right? So that's 4 things. You know, I just would be very cautious that, you know, and I think the Fed is going to be very cautious when it comes to that inflation boogeyman, which is why, you know what I mean? Like Jackson Hole and all that stuff is going to be important. And we'll get into that in a minute. But I wanted to just get through the impact of the inflation reports and kind of talk about those a little bit. So that was my spiel on the inflation stuff. And Ms. Bella said, bless you. Thank you. Earnings wise, right? So last week, earnings wise, the only thing to talk about earnings wise last week was shout out to Eli Lilly, bruh. Eli Lilly went crazy, dog. Up $78 in a week. Up 17% in a week. That thing went crazy. Other than that, I really don't know if there was like any other good earnings reports, or you know, it was just it was a very choppy week, right? So that really summarizes the week, right? Inflation came through. It was a really choppy week. If I go to the charts, you know what I'm saying, you can see that, you know, there were opportunities for the market to rally, right? Monday, we started with a gap up. We came back. Most people say, hey, we put lows in on Tuesday, got bullish, thinking we're going to get a bounce. Wham! They slammed it on that ass. And then again, Thursday was the trap, right? You thought we was going to rally on CPI. We ran up and bam, they slammed it again. And then come Friday, we got PPI. They gapped it down, but the buyers came in and did their job and just closed the gap. That's it. That don't mean like the seller's still in control, bro. Remember, we talked about it on last week's episode. I showed y'all the chart without the wicks and we looked at the volume. Who is still winning? If you look at the bodies of the candles, right? You look at the bodies of the candles, take all these wicks, and from the 27th, who is still in control of this market? Short term. Let me preface that. Since July 27th, who is still in control? It don't look like the bias to me. Just saying. So yeah, it was a choppy week, right? But definitely leaning to the downside. If you really want to get technical, so far from this 4,600 peak, the market has now pulled back a whopping 3.5%. But based on this close, it's really like 3%. And so, 3% pullback is viable. But remember, I said I want 5%. Institutions want 5%. That's not 3% is not enough when the market has rallied 31%, bro. I think I need more than 3%. So for the bulls who think that we can get a light bounce, possible. But let's continue on so I can show you why I don't think it's a chance. Another thing just to point out was that the narrative of the first 9 days being bad of August, it played out, right? So y'all know I like to follow narratives and keep up with how those things play out. So if you think about from August 1st right here into the 9th, that was something I had mentioned on last episode, was that the first 9 days are typically bad, bruh. Yeah, these are green candles, but for those who I know, the Hikanashi though, I still use it. That's all red to me, cuz. And I don't think it's about to turn either. Using Hikanashi, I use all the tools in the toolbox just to let people know. This don't tell me the trend is about to change. Another reason why I think bulls need to be careful. So yeah, that is where was we at? The first narrative. Okay, that brings me to this week. Now I can finally talk about this week transition. Let's get into what is going to be the price action drivers this week. I gotta go to my guy right here. I think this is who if I think this is who it is, I think on Twitter is I am Kurt. And if it is, I hope it is. We closed below previous low, indicating lower prices. I had connected with Kurt on, I think that's his name on Twitter, and he was basically explaining like one of the he was explaining to me like what was a breaker, right? Because I was trying to figure some shit out, and we talked about like, okay, you had to close below a certain weekly low or whatever, but at the end of the day, I learned some stuff, right? And cool, but I also was trying to share with him like, bruh, this is what I see, and like, I'm just saying, right? But he was like, bruh, but according to how we trade, this is. I was just like, okay, I'm just, listen, everybody has their own way. You taught me something, I was trying to teach you something. That's all I was trying to do, bruh. But it was good, right? Because at the end of the day, after he taught me that, I learned something, and all he did was just give me further confirmation of what I was seeing. I was trying to tell, bro, he didn't want to listen, but so where we at, dog? This week, right? This week. So we got some things that's gonna drive the price action this week. I see some comments. Let me get. We got stock chasers. What's good, Zay? How you doing, bro? It's been a minute, man. How you doing, fam? Eddie Get Fit say higher time frames are all red bear season. We're gonna talk about that. We're gonna see. Just turned on my alerts on for you. Hope all is well. I appreciate that, man. Yeah, press that bell, bro. I need that. We trade the chart. No bulls, but me either, bro. Listen. I don't care. I care about the price going up and down. Price is going down, so I'm a bear. As soon as I see that thing going back up, I will pivot to a bull. I just use that terminology because everybody uses it. But I'm with you. Like you say, I trade the charts, fam. I go both ways. And when it's time to be bearish, I will be bearish. And when it's time to be bullish, I will be bullish. The art of the pivot is going to be an episode. I'm going to do an episode talking about the art of the pivot because people feel like it's wrong to associate with being a bull or a bear, bro. As long as you know how to pivot, I don't care if you call yourself a bull today and a bear tomorrow, bro. As long as you making money, it don't matter about being right. I know a bunch of people that could be right, but are you making money? That's the real question. Yes, sir. We traded charts. Definitely. My bad. The Bears are wild in correction. Okay. All right. Anyway, let's get back into this week, god dang it. So this week is all about the consumer, y'all. Right? This week is all about the consumer. The consumer comes in focus. Let me go get up Forex Factory. So starting with economics, right? So the reason why it's all about the consumer this week is because Tuesday, we get retail sales and core retail sales. And don't forget, we also get Empire State Manufacturing. Okay, so we got 3 red folders. Monday is nothing, right? So it's whatever day. We have 3 red folders and we get retail sales. We also get data on building permits, right, and housing. So the consumer. Also, we on Wednesday will get the FOMC meeting minutes, and I'm going to get into that later, but that's a red folder. And big thing as far as earnings, and I'll do earnings in a second, is going to be a lot of retail sales data. So just sticking with economics, right? Retail sales on Tuesday, right? That's a red folder day. So, price, we'll see how that goes. The FOMC minutes. Okay, what I want to talk about the FOMC minutes is that it's basically what we heard from the July meeting, right? Don't expect no smoking gun. So I don't believe the FOMC minutes are a big impact to the market. It is a red folder, so it could be used for manipulation. Absolutely, right? Now, the reason why I believe it could be used for manipulation is because I also figured out something that I think many people are sleeping on. It's also the VIX expiration week. And we've talked about this before on Sativa Saturday, that when the VIX expiration comes up, which happens to be the same day as the FOMC meeting minutes, the 16th, that usually like the day before or the day after, you see volatility within the VIX. So please keep that mental note in your head that, it's not only that August OPEX, it's also VIX expiration week, and that you tend to see volatility out of the VIX that week. And when we get into the VIX, you're going to see why that's also important. All right. But so the media may use the FOMC minutes as the narrative, as the manipulation, but what's really happening behind the scenes is that we're going to have VIX contracts expiring. So that could cause some wackiness, right? That's Wednesday. But for the most part, like I was saying, and then we said Friday is OPEX, right? So from an economic perspective, that's really that. Now, a couple of things I want to get back to as far as earnings, the consumer, and this week. The first thing is we're going to get into the earnings, right? So I'm going to pull up the calendar. And as far as the earnings calendar goes, again, we have a lot of retailers. We have a lot of retailers reporting this week. So we're going to really find out how strong, right? Guidance will be key because they will be talking about how strong is the consumer going to be in the second half of the year, right? Now, before I get into that, remember we have been tracking consumer weakness. That's something that I said is on the horizon, could be a potential risk, but it hasn't shown up yet. But I've been watching some things, and I think again we need to be very careful. Consumer debt is at record highs, 17 trillion in credit card debt. Consumer savings are dwindling, and many retailers expect a continued slowdown by consumer in the second half. Right. And then I have this was some old data from June 17th when Home Depot was talking about the consumer was under pressure. This was one that I got from June 17th. Consumers' excess savings are on track to drop as early as the fall. Right. So I don't know. Let me pull that up. Right. And this was back in June 17th. Right. In that, consumers built up savings and stimulus, but now it's starting, cushions are looking through. I know that the savings is down like $1 trillion. So debt is sky high, but savings is coming down. Like we ran it through that pandemic cash, right? They were saying how excess savings was going to be going by October, and then that companies could start to feel the pinch. And so again, look, he anticipates the recession is likely to kick back off sometime this summer or fall. This is why I love my Asana data, because bruh, it be shit that happened so long ago that you might forget, and then I could just come back and be like, damn, they talked about this, and look, we falling right into it. Timely. All right, that was another one. Then you got this one, right? This is August 12th, right? Retailers take center stage. A wrath of economic data. Big retailers' earnings next week will give traders insight to the strength of the consumer after a mixed batch of inflation data. We will go through retail sales that come out Tuesday. You got Home Depot, Target, Walmart. Oh, here we go. This is what I wanted to show you. If those reports come in stronger than expected, that could highlight the continued strength of the economy, given a surprisingly resilient consumer, though it could also mean the Federal Reserve still has ways to go to fight inflation, right? So When it comes to the consumer, right? I think they setting us up, or they setting the market up. Because I'm going to show it right here. Bam. Alonzo Chambers said consumer going to be terrible. Nobody talking about the restart of student loan payments and its impact. Well, guess what, Alonzo? Your boy is, because we got it right here. Student loan crisis starts back up in October. You are absolutely correct, Alonzo. While the consumer has been holding up and the economy so far, but look at how it's been achieved. Blowing through savings and racking up credit card debt. What's going to happen when student loan payments kick back in? The consumer ain't going to be so strong, dog. I'm just saying, might be something you want to watch out for. Keep it on your radar. Okay, right? So that's the consumer. Now, what I also wanted to talk about was earnings, right? Because you would think that earnings, and I'll show you, shout out to Charles Schwab, right? Here we go. Let's do it like this first. Let's do it like this first, right? So Q2 earnings is roughly 90% done. And so far, 58% of S&P companies have beat on the revenue side and 79 have beat on the bottom line. This compares to a respective 67 and 78 last quarter, right? And essentially, it has been that earnings have kind of been better than feared, right? But yet companies haven't been rewarded, right? Companies have been selling off. And so while it's been an okay earnings season, we really haven't gotten traction. Now, let's talk about why we haven't gotten traction, right? Because I have found some really good information that really puts things into perspective. Let me go and pull this up, right? So let's talk about it a little bit here, right? Let's really dig in to earnings season, okay? Earnings season, right? Quarter two generally look decent, but not outstanding, which also helps explain why the major indexes haven't found much traction, right? Most of the rally since the start of the year reflects multiple expansion, meaning the rising price earnings ratio, PE, going up. Now we talk about the PE. Wait till I get in the bag on this one. The forward PE recently stood at 19.1. That's up from the 10-year average of 17.6. We've reviewed this data almost every single week, bro, from JP Morgan. I've been showing it time and time again, and we've talked about how valuations have been full, right? This is what is key. This is the key effing paragraph, because this is what I have said multiple times. Earnings are down year over year for the last 3 quarters, including this one, meaning the P part of the PE ratio has risen substantially, even as E has fallen, meaning earnings have been going down while the prices have been going up. Arguably, investors want to see more muscle from the E, meaning we want to see better earnings, right? We want to hear better guidance, right? But the guidance is not getting better. Before rewarding companies much more in the way of P, right? We done ran up. We done ran up. That's especially the case with treasury years nearly catching up to the stock market's earnings yield recently and offering stiff competition in dollars is what they was talking about. And then they go in and talk about that. And then the last thing is, while that's good news from consumers, it's not necessarily so great for companies. We'll get a weekly update later. Where the total consensus for Wall Street expects the total EPS to land this quarter. The estimate has climbed recently, but remains underwater year over year, down 5%. Analysts expect full year 2023 S&P earnings to be roughly flat compared with 2022. So I say all of that to say that, let me pull up something else. Where is it at? I know what I'm about to go to. Wait a minute. That good old PESPX, right? So this represents the SPX PE index. Now, if you think about the data that we just read that said that most of the PE was due to the expansion in price and not due to earnings, and we know that earnings are coming down, and you look at this indicator and you can tell that it basically hit a resistance. We are back at levels that are coincide with our last fall, as well as levels that was crazy in 2000. And I'll put on the price label so you can see it even clear, right? But we are at like an area where 26.95 we was there in December of 2021. That's when we started to have the big downdraft, right? So again, valuations are kind of full and could use a pullback, right? So the only way you're going to get these valuations down, because earnings is already down, is that price has to come down. I'm just saying, right? So wanted to share that because while a lot of people or bulls argument is that earnings season, kind of can hold things up, I don't know no more, right? Because again, another thing I have been tracking is the 3 items needed to sustain the rally, right? And we have been monitoring it. And now, remember I was saying, I think all 3 of these could be in jeopardy, right? All 3 of these could be in jeopardy. So here is where they land. Number 1, do investors and traders need to believe the Fed won't raise rates beyond 2 increases? Okay, wait till we get September. Okay, this is how it's gonna get good, because if the CPI has put in a bottom and we start to range, this is now questionable. He may not raise in September. That doesn't mean they won't raise in November or December, because again, this is why recording data is so important. Last meeting, he said every meeting would be live and that they had penciled in 2 rate hikes before the end of the year. It doesn't necessarily mean that he had to do them in September or whenever. They can do them whenever. So at the end of the day, we now have to, it's kind of written in stone that he's not going to do another one. So I personally believe that this is questionable, because if we get data that's in September that says it's like hot, while they may still pause in September, which I think is reasonable based on the data, but if it continues to trend that way, say over October and November, I would not be surprised if it's back on the table for the November and December meeting, and that's just going to throw things in all of a race. So the market is probably starting to think about that stuff. If I'm thinking about that stuff, the market probably think about that stuff, because it's a forward-looking mechanism, right? Will investors remain confident we're going to avoid a recession? I've been saying that one was debatable, right? All I kept saying was that the soft landing narrative was catching a lot more support, but people are still going to debate whether or not the country is going into recession or not. And it's still debatable. So now 2 items are in jeopardy that were in order to sustain the rally. And now the last one, right, was, could AI stocks prove themselves? And we said evaluations were full and that 80% of the gains was made up by NVIDIA, Amazon, Meta, Tesla, Google, Apple, and Microsoft. Apple has sold off after earnings. Microsoft has sold off after earnings. Tesla is selling off. Google, okay. Amazon, okay. Meta, okay. And now we got NVIDIA. And NVIDIA has started to sell off, because if you looked at last week, NVIDIA was down like 6-7%. And if you look at that chart, oh man, we will look at that chart. It doesn't look too good. And they got earnings next week. So not this week, but next week. And so again, earnings was okay, but we wasn't really rewarded. So what is going to sustain the rally? I don't know, man. I don't know. We're gonna see. So let's see. All right, I think I went through this. Let's make sure we recap this upcoming week. So as far as this upcoming week, we said economic wise, consumer is in focus, right? Retail sales. Friday is OPEX. Don't forget Wednesday is the VIX expiration. FOMC minutes on Wednesday at 2 p.m. So those are kind of your high impact stuff. Housing data is probably low impact. Earnings season we went through is pretty much, that earnings season is pretty much wrapping up. Have all eyes on the retailers, right? And then after that, we're going, all eyes are going to turn to probably Jackson Hole, right? And then that last week of August, we get PCE and NFP Friday. And I'll save some of that stuff for like next week's episode, but it's going to get all I'm going to say is this is the reason, that I'm preparing people, is because there's a narrative that typically the back half of August into September is also weak. And when you look at what is in front of us, the back half, bruh, this macro picture don't point to smooth selling, man. It doesn't. I'm having I know, look, there is people who solely rely on technicals, and you can make a technical bullish argument. I get it, but I'm not one of them people. I look at the whole board. So from a macro perspective, I'm struggling when I add that in with my technicals and I see what I see from a technical perspective, and I'm looking at the macro, I'm like, I'm not seeing the right things in place that would make me want to be bullish and do this. Again, to each his own. I'm laying out my case for the internet to critique me. I don't care, right? Because at the end of the day, I'm making decisions that's best for me and my family, and I can sleep well at night. Because I know how much work I put into this information and data. I just share it openly. So like I was saying, this macro picture don't look too good, man. We got to acknowledge that historically, this is one of the weakest months. I think people keep sleeping on that, which is why last week I was like, yo, is the market too complacent? Like everybody's like, oh, I know that's the narrative that is typically bad in September, August, but man, this market been running. Man, this market got y'all psychology messed up. Now, when it's the right time to go bearish, people don't want to do it because you've been tricked up, right? Of course, all year it hasn't paid to been bearish all year. So now you second guessing what you know to be true, right? And so I just feel like people are still complacent. There's still a lot of bullishness out there. There's still a lot of people that just are like, well, we about to get this bounce. We about to get this bounce. All right. Just like the whole time we was rallying up, everybody was like, we're going to get a pullback. We're going to get a pullback. We never got it. Like people are completely underestimating, just like how in the beginning of the year, the rally was underestimated. Folks are underestimating this pullback, man. And I think that's going to get some people in trouble. You know what I mean? Not the people who watch this show or not the runners or not the Patreon family, because I'm on there. I'm telling y'all, bro, we own it. Shout out to my moderator, Dre. Tell him, bro, we own it. All right. So with that being said, let's go ahead and hop into a little bit of indicators. And I'm also going to get into the topic of the night, which is when retail FOMO turns into fear of loss. We already talked about the consumer health. I laid that out. That's a little bit in jeopardy. I think they're playing some games. But let's go do a little bit of indicator check-in, right? So one of the things is, like I've been saying, too much bullishness, man. It's too much. So let's do an update, right? So again, remember, I put a bet. I said we're going to see this number decline the next reading we get. Bullishness has now dropped from 49% to 44%, and we are coming down from our peak, which is July 19th, which happens to be the peak of the NASDAQ. If you go line up this data with the NASDAQ, you will see that when we got this reading, ever since then, the NASDAQ ain't went higher. It's just been making lower highs and lower lows. And as you can see, the bears are at 25%. Now, until this gets to like 30, bears, it's a couple reasons bears shouldn't have nothing to worry about right now. But this one until this gets to like 30, bro, if you a bear, you really shouldn't be concerned, dog, because most people still bullish. Like we are still the minority. To sell the rip camp, we still the minority, right? People aren't buying into this. They believe we're going to rally back up and close that 4,500 gap, and we're going to go to 4,600. And I said, I think we can do it, just not in August or September. I just don't see it in August or September. So if you're a bear, this is one of the reasons why I think as a contrarian, you shouldn't be concerned, because the sentiment is still very bullish. Twitter, right? Even this, which is professionals. That's one, right? Let's go look at the fear and greed. If we go look at that, bro, we still operating in greed. Prime example, people being greedy. They trying to squeeze every penny out the market. I told y'all last week, I'm checking myself so I don't get caught being greedy. I'm not trying to squeeze every penny out the market, right? Because I can play the market both ways. I can play it down or up. So I don't need to keep trying to squeeze it. The market has ran from 3,500 all the way to 46, bro. That ain't been running. Why am I going to try to squeeze this last 100 points out? It's getting going. I'm dog. Again, people are greedy. And this is just another factor of why, if you are in that sell the rip camp in the minority, I think you are good in that you have the right perspective, and that folks need to really take a step back and be like, yo, do I need to check myself and pivot? And there's some more stuff that I'm going to go through that's going to help people. But, bro, we still operating in greed. At the end of the day, we still operating in greed. And, that's something that, Warren Buffett, the great Buffett said it. People is, when people greedy, be fearful when people greedy. So that's that. Let's go take a look at our valuations, right? So we already went through and said the valuation is too high, but really we went and looked at the PE, this one, the NASDAQ. I remember, so this is another one that I said we're gonna do weekly updates, but I talked about how in 4 weeks I expected it to be at a certain number, and that we would check in on the progress, and that this also represented a turn in the NASDAQ. That usually when I see this turn, is usually not followed by good things. And so far, it won't freaking do it right. All right, here it goes. So remember last week when I talked about the NASDAQ, and I was like, yo, this joint right here, every time we get this candle, the preceding 4 weeks, we usually see a turn. This is week 1. And we are making our way down to that 100, 200 that I talked about last week. So after this episode, we come back next week. Let's see if we get a number 2. And then you see turn 1. And then this is a big one. So listen, I ain't going to get into my summary yet, but you see what I'm leading up to. Oh, baby. Where Dre at? Sell the rip. Michelle say, this is the pullback folks have been waiting for. It's in progress. Absolutely. People have been asking for this pullback. And now that it's in progress, it's like they want it to end after 1 week. That ain't no real pullback. That ain't how a correction work. What in the world, man? So that's another indicator, bro. This is that week 1, right? That's why I said tonight I ain't gonna have to spend too much time, because if you watch prior episodes, I'm just gonna be giving you all the updates. Boom, that's another point, right? Okay. This the new one. This the new one right here. This is a new one that I learned, and I'm super excited to share this with y'all. And I gotta shout out. I think it was FX Evolution is the one that I seen him put this. I seen him use it on his channel, and I was like, "What is that? Like, that is new. I never seen that one." And give me a second. Let me set it up how I like it, because he used it a different way. But y'all, when I tell y'all this jank is clutch. And see, this is why, again, I believe in like watching multiple people, like other content creators, because you learn from them, right? I just sit back, I shut up. I don't listen for them to either validate my how I feel, or I don't listen to rebuttal them. I listen to learn. And dog, this jank here. So let me just put y'all in game. It's $BPSPX. You can only find this on stock charts, and goddamn, all these fucking pop-ups, y'all. This is wild, bro. I'm gonna have to just get a freaking account so they can stop. All right, thank you. So this joint is called the S&P 500 bullish percent index. So the S&P 500 bullish percent index is $BPSPX. You can only find this on stock charts, and so all you can see what I'm about to say with it, right? It helps you identify max bullishness or like peak bullishness, right? So when we get up to these peaks, oftentimes the market has reversed, i.e. a pullback or correction, right? Or a straight up crash, right? Like you can see crash, and these are like pullbacks, right? But as you can see, we are in the, go ahead, Miss Michelle Tucker. We are in the midst of that pullback, right? Like that, this was the peak about 3 weeks ago, right? 3 weeks ago, we'll say. So if I put SPX on a weekly chart, this candle, right? So if I go this, because this is on a weekly. So 1 week, 2 weeks, 3 weeks. And then if I go here, so this week, and then this week. This was the peak. Bro, that was the peak. And since then, God damn it! Ooh, that boy got some cold game, bro. Listen, I got some cold game, man. I got some cold ass game, dog. I gotta get myself a pat on the back, bro, because the way I be laying this shit out, dog. Okay, that was what I wanted to share. So you 75 people who watch it right now, boy, y'all just got one hell of a gym, boy. Cause oh my God, that thing gonna help y'all out. So I wanted to share that with y'all tonight. That's a new indicator. And man, I think that thing right there is, bruh, listen. When I saw this bad boy, I was like, oh God. Oh God. Oh God. All right. So let's also talk about momentum. Right? We gotta talk about our momentum. So when we talk about momentum, and I hope Jack is in the building. Because a couple weeks ago, he's like, yo, bro, this young at like 80 something. What you think about that? And I said, bro, this tells me you probably need to take profit and that we are at a point where typically, we like to pull back, right? And bam, dog. Like again, it ain't nothing but an update. Since if you've been keeping up, pull back, right? So the S&P 500 stocks above 50-day is now at 54%, meaning that we are seeing more stocks fall below their 50-day. Same thing goes for the 200-day. We were all the way up here at 75, and it has now pulled back to 60. And if you look, it's at an area that is resistance. That when we get up here, these are peaks, and we pull back, and we do corrections. I'm just saying, peak, a boo. Oh man, yo, I'm on one tonight, dog. I told you I just wanted to have a good time, but I wanted to keep it cool, calm, and collected. But I gotta have fun, man, because I love this shit, dog. Like when I see shit play out like this, I'm gonna have my fun. So momentum don't look too good, man. You know what I mean? Also, our total percent of stocks above the 200-day has fall from 61. We down to 52%. And as you can see, we are definitely at, more peaks. And so momentum is slowing down, right? Momentum is slowing down all across the market. And that's not good, right? So we also got to talk about the dollar and the VIX, right? So the dollar, right? Last week, we talked about how I said, listen, the dollar could go either way, right? I was like, yo, this John and my man's is in the building. What's good? I just seen this comment. I hope you remember. We talked about it, bro. Hey, we here, bro. But I talked about how the dollar could go either way, and I was like, it could go up or down from here. It was just depending on how to play out. Well, it went up, and so. I think we're going for this high, 103.57. And if we get past that, I got my 50-day EMA. And usually when we get through this, we like to really push. So I got this high of 104.69. And then you got this area of 103.57. And so we got this EMA. So just got to pay attention to the dollar. But if it continues to get strength, it's going to put some pressure on the market. The VIX, right? Yo. I know I once said the VIX is dead, the VIX is broken, and it was 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. It was dead, it was broken. But this is why I said you got to learn how to pivot and be agile, man. Just because some shit is broken don't mean it can't be fixed, right? So the VIX, what we have to realize, y'all, is that the market had a down week. The market had a down week, and the VIX was down 6%. Oh my goodness. People are way too effing complacent. That's what this tells me. I'm using this indicator that yes, it's under 20. So we technically in the bull market. However, it also tells me the market is very complacent. How is volatility at a 14 when we about to go into some uncertain shit based on the data I see? It's too low. Now it's just too low. And at the end of the day, when you really look at what happened here, it was a bullish engulfing. We popped up, ran some stops, pulled back into the middle, right? for us to just fill some orders, right? So this is just a pullback. This is a bullish pullback, and I believe the VIX is set to skyrocket, right? If you look at this from a pivot perspective, right? Look at that breakout, pullback, and if we just do some proofing, and I do this, the VIX is set to get to 18, maybe even 20 by the end of this week, right? And when you think about what I told y'all earlier, what happens Wednesday? VIX expiration. What typically happens when that happens? The day before or the day after or the day of, you get VIX volatility. Bruh. They was closing. If you, oh my God, I'm telling y'all, the VIX is ready to, it's not, the market is too complacent. That's all I can say. The VIX is ready to explode, man. It swiped all of these lows from 2020. We've been talking about how like it got under the pandemic, right? It swept these lows. You look at it from a pivot perspective. This is a nice double bottom, triple bottom, if you ask me. Breakout, pull back. Bruh, we are at least going to come for this 18 and probably get past that. The VIX is telling us the market is too complacent, man. Something is brewing, and it could be one of them just headliner moments, and then like that, this thing is going to explode. I know I said it's dead, it's broken, but I need y'all to keep your eyes on the VIX now, because the fact that the market been struggling the way it's been struggling and the VIX is down, don't let that VIX turn up and that dollar stay turned up. That ain't good, man. So that's the VIX, right? I wanted to go through that. And then the last one I wanted to use that we have been using and that we hadn't talked about for a minute. And I think I seen a comment about it. Where was it at? I don't see it. I thought I saw it, but I don't see it. But I'm gonna go to it. The Skew. Right, we've been talking about. Well, I talked about the Skew before. The Skew is a black swan indicator. It ain't that great of an indicator. That's why I don't really talk about it too much on the show like that. But it's handy when you freaking need it. And remember, I was saying like the time to be concerned is when this gets crushed. Right, when it's up here, it's hard for the market to like fall. Right, because that means everybody's hedged up. A lot of people have puts. People are betting for some type of black swan event. But when this thing is crushed and is low, well, the market is susceptible to falling now, because now people have gotten comfortable, right? People have gotten complacent. They taking their bets off. They don't think nothing bad is going to happen. But in reality, this thing is used the opposite, is that when it's down here, you need to be concerned, right? Because, so the Skew is getting crushed. And I showed you guys how, like, I was like, the Skew was basically in a divergence, because we had moments when the Skew was going down, but the market was going up. That is going to get unwound, because that is not normal behavior for that correlation. So when you see something like that, typically the unwinding of that can be very volatile and very fast, right? Because that ultimately means somebody got trapped. So seeing this has me, again, Spidey senses is tingling right now, man. Listen, like I said last week, man, when I was telling the bears to be cautious because the market was showing very bullish signs, and when we was running from 4,100 all the way to 43 to 45, I was like, bears, y'all need to be cautious. I got that same feeling from my data, and I ain't gonna say feeling. My data is telling me the same thing that I need to be now telling bulls. Y'all need to be careful, and that the bears is the ones that is like they lurking. They lurking. They've been getting their ass smoked all year. You don't think they're gonna use the worst 2 months to get a little bit of payback? They've been getting smoked all year. They want some payback, right? So that's an update on our indicators that we use, right? So I took you through all of that. I wanted to do that. Okay, so now we are at 1 hour, perfect timing, right? It's probably the show gonna go a little bit extra, which is fine. We're gonna wrap it up with technicals, and of course, we're gonna get into a little bit of narrative economics and Q&A. Now, narrative economics, right? We're gonna get into that a little bit. So the topic of tonight, right, and the title of the show is when retail FOMO turns into fear of loss. Now, crap, I meant to look up the episode where I talked about this, but there was an episode where I talked about FOMO and fear of loss, and it was all comes from Mark Douglas, the writer of Trader Discipline, and he wrote the other book, Trading in the Zone. But essentially, right, he was saying how sometimes, right, price could be moved on emotions, right? And his way of describing it was that when people have the fear of missing out and FOMO, prices are going up. And just as fast as FOMO happens, you can have that turn into a fear of loss where people are like, okay, well, I ain't making money no more, so I need to go ahead and cut my position. And as that happens, more people are going to start cutting, and then it's just going to be like, well, shit, it's a fear of loss, right? It's no more FOMO. People are just scared, and they trying to book profits, and that can create a cascade of selling. And I want to say that I think we about to be in this cycle, right? Because again, Twitter is what I would consider retail, and just other people I talk to are all in other. I watch other YouTubers, right? So they also will be considered retail. A lot of them are still bullish. Like they're like, well, until we break this level, it still could be this, right? Hopeful, very hopeful. They are hoping for a bounce. I tweeted that like 2 weeks ago. I said, yo, there's gonna be a lot of trap bulls hoping for a bounce. Y'all folks got a lot of hopium right now. Y'all better leave the hopium alone, man. But we haven't even seen real selling. That's my point, is that we haven't seen retail fear of loss yet. They think they getting a dip because of FOMO, right? They are buying this dip because they don't want to miss out on their next rally to 4,600 or the next rally to 4,700, right? That's why retail is buying the dip, because they're like, man, the market been rallying all year. The market is crazy bullish, this and that, and we going to 46, 4,700. Not in August and September we is. But they trapping retail, right? They've been putting all the bullish headlines and all that stuff to get people all amped up. And something else we're going to take a look at is, remember how I said, please pay attention to how the news cycle changes. Yo, when I say the amount of negativity that came out last week that I was able to rack up, that is why last week's episode was a shift in investor sentiment, because I was trying to warn people that, listen, the market is going to be very fickle now. If all it's going to take is a string of negative headlines, and then that's going to create a cascade effect of just fear, and we still ain't even there yet. So we still can go lower, which is why I'm like, yo, be careful, because we haven't hit certain criteria for this to be that bounce yet. You know what I mean? People aren't fearful yet. People still greedy, right? People still bullish. So sell the rip. Now, another thing I wanted to talk about was that is the psychology part, right? And I want to go back to this graph and pull this up and use this as my guide, right? Because as FOMO turns into fear of loss, it goes through 3 cycles. And those 3 cycles are, listen, my episodes be flowing, because last week we talked about complacency. We just need to cool off for the next rally. Well, I'm about to give y'all the next 3 phases, because be prepared. This is what we about to see. Okay? As FOMO turns into fear of loss, people are going to start to get anxious. Okay, man, y'all said this market going to bounce. What's taking so long? Oh, it's coming, man. Just wait, man. This dip is taking longer than expected. Right? You're going to be like, bro, I thought we was supposed to bounce, man. What's going on here, right? They just gonna be like, well, it's gonna be all right, it's gonna be out, it's gonna bounce. And then the next stage is denial. They're gonna be like, bro, you bought calls in Nvidia or Apple, you're gonna be good, right? It's in great companies, they're gonna bounce back, right? If you buying calls in tech and it's going down, you think we're gonna get this bounce, right? Oh my god, this shit is so clicking. When you get past the anxious part, you're gonna be like, all right, y'all said we were supposed to bounce, it ain't bounce. Then they're gonna be like, but bro, you got Apple calls. You in a good company, right? They denying that price is telling them to go down, right? And then you're going to get into the last phase, which is when we get into fear, loss, and fold. This is when full FOMO is going to go into fear, loss. Shit, everybody's selling. I got to get out. I need to get puts. I told your ass to get puts last week. Why you just now waiting? You waited because all your supports got broken and finally you got confirmation. This is why retail thinks so effing backwards. And this is why institutions take advantage, bro. And then you're going to get panicked. That's stage 3. So be prepared to see FOMO when retail FOMO turns into fold, fear of loss. Okay. People are going to start getting anxious. People going to start having denial. And then you're going to get panic selling, right? Because we haven't even gotten there yet. What we have seen so far is really profit taking. That's all we have seen is profit taking so far. This is just profit taking. We haven't even gotten into panic selling yet, man. And that's why I think, again, be careful. Protect yourself at all times, man. Like I said last week, I want my people to be ahead. If you watch this show, you and the runners, you and the Patreon family, man, y'all know how hard I go for this stuff, man. Y'all know the work I put in. I would never try to spread fear. I would, and I always will. If I see I'm wrong, I'm not scared to pivot. I don't care. I am not publicly embarrassed when I am wrong. When I tweet some stuff and it ends up being wrong, I'm not embarrassed. I go get to the lab and figure out why I was wrong, and then I come back better. A lot of people don't like to put out their predictions or whatever because they scared of being ridiculed or whatever. I sleep well at night. I'm not. I have been wrong before. I will be wrong again because that is the name of the game. Ain't nobody in this game 100%. Nobody in this game is 100%, bro. And if you can find one, shit, please point them out to me. You feel me? So, yeah, get ready, man. I wanted to go into that. Now, the point that I was making, and I kind of already said it earlier, was that I just think a lot of people are underestimating this pullback and correction. We just rallied off the lows, which was underestimated, right? We rallied 31%. And so a 10% pullback is definitely acceptable. You know what I mean? You're definitely going to get 5. The average in this rally bull market we've been having has been at least 8. So I think if this is going to stay a bull market, then you got to get at least 8. And 10 is definitely acceptable. And even 12 is acceptable. Right. And so I think people need to be mentally prepared for that, that you could possibly go that low before, you truly see like, okay, is this a real bull market? And are we going to actually go back to those highs at the end of the year? Right. Are we going to go back up and fill that gap, that 45.50 that was left there? Right. And all of that stuff. So, that was that, man. I think I had mentioned how I found a ton of negative articles. So once I get to the board, I'll pull up a few things. And let me see if there's anything else that I need to go through. So yeah, man, we got an hour. Look, drop in the comments if you feeling the show, if you learned anything. Tell me what you thought of the show. If you got any questions, I'm gonna do a quick Q&A, man. Go ahead and drop all of that in the comments right now as I go through this final bit of information. In that way, as I'm playing catch up, I can automatically go into that. So start dropping that in the comments if you stuck through the entire show. Definitely want to get into that as well. So last thing that I wanted to share as we wrap up the show and before we get into questions and all of that is, let me zoom out just a little bit here and let me see if I can find. So we went through the economic. So quick recap, man. We went through our economic data, right? So as y'all put questions and what you learned and all that. So just a quick recap of the episode. We went through our economic data. We talked about CPI, PPI impacts. We talked about the upcoming retail sales data, FOMC meeting minutes, all of that good stuff. We even covered earnings season, and we talked about valuations and just, how earnings season, it wasn't what it was, man. Jackson Hole, we'll get into that a little bit later. I do want to now close that down because I was able to use that. Complacency. Is there anything under here? Oh, yes. Okay. Y'all, I think that the market is setting, or I think the narrative in the market is setting the market up for a 2% drop. It could happen. I think it's going to happen in one day. Like there's going to be a day when we get like a 2% drop. I don't know the day, but they have been prepping it. The reason why I say that is because I found an article on Market Watch that says the S&P 500 hasn't seen a 2% daily drop in nearly 6 months. Does this mean the sell-off is overdue? When I read this, I thought we was going to get it this week, but we didn't. However, look at this, y'all. Look at the technicals real quick. The week before last was a 2.27% down week. We got an indecision doji that is only down 0.3%. So, two things. If you want to get a, say, 5 or 6% pullback, right? So 5 would get you, say, right here to 43.74, and then 6 gets you down to 43.30, right? That would be a nice pullback from the highs, and then you might be able to see some type of like a dead cat bounce. However, what I want to point out is in order for us to reach that level, what would we need from a weekly closure this week? Well, if I just go to this close and I say, what's a 2% week look like? Why does a 2% down week get us to 43.74? And I think that's the 5% number, right? And then I think if you do like 3% or 2.5%, I think 3% gets you to 3% gets you to 43.29. 6% is 43.30. This shit is math, people. So I think and again, VIX expiration week, OPEX week. Oh my God. This is why narrative economics is so freaking important, because when you add up all of the gems, bruh, this is a lot of overwhelming data that tells me to be very effing careful, and that I am watching to see if we get a 2% day, because if we get a 2% day, that is going to be one hell of a day for anybody who trades SPX, bruh. It's going to be some bags made on that day. And so be mindful of just that, right? That was something that I wanted to point out. So that was that. That was one of them negative headlines. Let me see. Second half correction. Okay. Yeah. So this is what I wanted to point out, right? As far as my collection of data. So 6 days. So all last week I was collecting data. I have an article that talks about a test is underway. See how low the markets can go. Dan Niles, he's a respected analyst. He said the S&P could fall by 10%. You got Bank of America, who came out and said a tactical correction is underway. God damn it. Didn't I say last week that when all of these freaking institutions start to go right, they were saying, how they was raising price targets and there's going to be no recession. Now, all of a sudden, the very next week, they talking about a correction is underway. You can't trust these people, bro. This is why it's always key to track them and just understand what they saying. Learn what they saying. You don't gotta agree, but just learn what they said, right? Recession or not. So see, right? This is where they was talking about, despite a recession. We talked about consumer weakness, higher unemployment. Okay. Another thing that I'm gonna drop on y'all before we end the episode again is there's a BRICS conference coming up. Right. So just be mindful that could have some impact on the dollar. There's a BRICS conference coming up. So BRICS 2023. It is actually on, when is this damn conference? Because I saw it on the calendar. That's how I found. 8 days. There you go. 8 days till BRICS 2023. So that could definitely, play some impact to the dollar. Especially, let's listen here. This is how I be putting stuff together. That joint is in a week. All we need is for the dollar to have a bullish week, right? So the dollar could push up this week. And then let's say in 8 days when the BRICS conference happened, some bullshit ass news come out from the BRICS and then the dollar fall back and it pull back. That's how they be setting stuff up, man. So the dollar will rally, then BRICS come out, the dollar pulls back, and that's how you get somewhat of a relief rally after you have gotten the big pullback on the market, right? I'll be dropping some gems, man. I hope y'all be catching it, dog. Oh God. So that's that. The debt storm. I'm saving the debt storm for later. We're gonna have some conversations on that. I don't want to get into much of that. We went into our bullishness. We went to evaluations, summer trading volume, all that's good. We went through that. So yeah, that's really it, man. That's all I want to share. I don't want to give out too much tonight. I think I've given out enough. I do want to save some stuff for the next episode and just going forward. But I always got to make sure I do my updates. There's one other last update, right? I got to update the play that we've been tracking. So I want to hold myself accountable. The play that I talked about and gave out was the October 425. We've now been tracking it for 3 weeks. And so again, this is the premium, right? And we literally just went sideways all week. And I mentioned I wouldn't be surprised if it came down to like this $4 range, but it's just this to me is position building, right? Institutions, if you're an institution and you got like millions and billions, bro, you're not going to just come in and buy all your contracts in one day. You're going to layer in. This looks to me like layering in because they got a nice little average cost somewhere around 450-ish, 460, whatever you want to call it. And if we make the next move up, they up 100%. And when you moving big money, you good. You don't need no crazy high percent. So the 425 is at 458. When I first talked about them, they was 6. And so again, when I talked about them again, they was like at 5, right? So I mentioned how they came all the way down to 2. So they still holding life. And that's the update on the 425 October puts. I talked about that. All right, I'm gonna go to the questions and then we're gonna do the technicals and I'm gonna end with my summary because we had I got about 15 more minutes to go. So let's do it, man. Let's go take a look at some comments, man. Let me stop sharing my screen for a second. Let me drink a little bit of water here. Again, if y'all like the episode, tell me what y'all learned or something. All right, I'm gonna start right here. And go with my guy Q. He say, plus the rebalance of the NASDAQ 100 Qs, I was expecting a pullback in the top holders. Okay. Yes. So if I think about what I learned, we did do some rebalancing. And so I guess a pullback from the top holders makes sense. I agree. Kevin say that new indicator was fire. I appreciate it. What's good, brother? Ain't seen you in a minute. Brian say fire episode. Hey, Sheena, what's going on, Sheena? How you doing? Got a rewatch. I appreciate you tapping in. That's a runner right there. Shout out to Sheena. Growing up Jamaican tech stocks, summer seasonality out the door. You know what? I really haven't been paying too much attention to the seasonality this year as far as in my analysis. I probably need to take a look. But I know that tech seasonality isn't that great like September, October usually. So I guess I would agree. I do agree. If that's what you're saying, I agree with you. She said, my guy Sai said, Jim's like always, appreciate you, dog. Recession is being kicked down the road 24-25. Absolutely. I think the recession is definitely being kicked down the road. Listen, man, as being somebody who got their degree in finance and economics and just been doing this stuff for a very long time, and just my personal journey as far as on personal finance and all of that stuff. Listen, if you were to look at our country as a person and you was to look at their finances, bruh, that shit is messed up, bruh. Like, your debt is out of control. You don't make enough money to pay off your debt. Your budgets are just all over the place, right? You know what I'm saying? Like, your finances, if as a person is effed up, bro. You owe a lot of people money. It is not good, right? So I can't ignore that because I understand it, right? And so while again, not trying to spread fear and not saying it's gonna be the end of the world, because like always, we'll figure a way out of it, but it's gonna be rough, right? Like eventually somebody gotta pay the piper, bro. We just cannot keep printing money like this, man. Again, I said it last week with a debt to GDP of 130%, bro. For every $100 we make, we owe 130, dog. That is not sustainable. So yeah, I think something is brewing, man. I don't know what it is. We're gonna find out. But stay cautious. Wyckoff, I believe that's called. I'm not sure. Okay. Fire episodes using my bro. Lots of work behind this information. Pride as well. Salute. My guy, I appreciate you, Dre. You already know it, man. Eric Horton, what's going on, man? Appreciate you for tapping in, brother. He say thank you. I appreciate it. And then Daryl said, just learned about those Hikinashi candles today and the runners content. Those are nice. Episode was great. We appreciate you. My guy, yes, Daryl just joined the runners. So shout out to Daryl. Appreciate you as well. He's been going through the content and loving it. He actually hit me on the side, and we got some great things, man. Like I said, my archive is crazy. And it gets crazier every time. So what I'm going to end on my summary here, guys, before we leave. So I have, again, ever so diligently walked you through why I believe what I believe, right? And when I look at the SPX and I go to the Hikinashi candles, this is just the first red one. And usually that second one is pretty big, to say the least, which usually results in a pretty hefty drawdown, anywhere from 1.5% to 3%. And so when I put my data together, my expectation is that by Friday, I would like to see the market close below 43.80, right? So I want us to break this weekly candle right here and get up in this green box, all up in here, right? I want us to get all up in that. And when I look to the left, I got sellers here, and I definitely got sellers up in here, right? And so, and there's a mean wick here and sellers here. So, when I think about what was repaired in this rally, all of these gaps, when we had this big drawdown, all of these gaps from them, that has all been repaired. All has been repaired. So it could be just as easy for us to then repeat this process and slide all the way back down to these lows of 40, 41.22. I ain't saying it's going to be very, very fast, right? But what I'm saying is that, the slide could commence quickly, man. That's what I'm saying. Be careful, man. God, and so my expectation is that, I'm thinking we're going to see a 2% week. I would love to see the market close below 43.80, preferably 43.77, right? So that would engulf not only this weekly candle, but this candle as well. What did I say? Yeah, so like I said, man, I believe there's a shift, right? I think that I think other people are starting to see it now, right? And as more and more people see it, you're going to have the herd join the party. And so, at minimum, I think we can get, 100 points, right? And so if you think about the weekly close here, if you do 100 points, 64 minus 100 gets you 43.64, right? And both of those, if you just do 100 points off buck, I know that gets me to the numbers that I'm looking for, right? And it gets me under my numbers. And it just so happens that from a percentage perspective, 100 points puts you right at about 2.24%. If you've been watching this whole episode, I talked about a 2% day and all of that. So you already know why I'm so amped about the confluence, right? I love the confluence. And so, yeah, man, that's what I'm looking for. I think market participants are still too bullish. And I think a lot of people are still underestimating the power of this correction and this pullback. Last episode, I was like, I think we're on the cusp or the start of the 8% pullback. I feel even more passionately about it because people keep trying to tell me that I'm wrong. And I feel good about being in the minority right now. I feel good being a contrarian right now. And so just like people disregarded the rally, I think they disregarded this pullback. Just a couple of trade ideas that we had talked about and that have been progressing pretty well is the SQQ trade. I talked about watching this turnaround. I mentioned how 16-17 would possibly be the bottom. And so when you look at the SQQ the last 2 weeks, again, if you use certain concepts, they would say that this is an order block and price has started to take off. And so I'm liking what I'm seeing from SQQ, man. I'm bullish SQQ, which means that I think the Qs can keep going down. And when I look at this chart, this thing got a lot of room to run. We got some volume imbalances it can go clean up. We got some highs we can take. And so yeah, that trade idea is now starting to work out. We talked about possibly being along like energy. Oh man, shout out VLO. Woohoo! That thing was cooking. That thing was cooking. Energy is cooking. This was the one that I was like, yo, I like VLO as the play. I think another, good energy is Chevron. Chart looks pretty decent. The Exxon Mobil, Oxy, right? All DVM could be one now because it's lagging. As far as healthcare goes, y'all know UNH is my favorite here. Shout out to Amgen. The runners know about Amgen. Been smoking. And utilities, right? So utilities, the top play here is Duke. Shout out to Duke. If you in the Patreon group, I put y'all, we've been in September 95 Dukes because it's a utility. So Duke was one of our hedges that if the market was going to be bullish, that was going to be an area we wanted to be in was utilities, and Duke took off. So we went in both ways. We got protection and the areas that's running, we in it. So, and then listen, I talked about NVIDIA. Listen, this does not look good. This does not look good. I think we can see NVIDIA go sub 400 this week. You got a volume imbalance, so I would not be surprised if we see NVIDIA sub 400, 375. And if the chips keep falling, it's not good for technology, man. So that's how I'm going to end the episode, y'all. I appreciate you guys for rocking with me for an hour and a half. I'm noticing that as my content is getting better and better, I'm going a little bit longer, but that's okay. I mean, it's value here, right? And so, again, I hope y'all enjoyed this episode. I know I did. I had fun. And again, I can't wait to see y'all next week. We're going to talk about what I got right, what I got wrong. Because again, like I said, I sleep well at night, man. You know what I mean? And I'm not embarrassed. I make the best decisions with the data I have and for my family, and I'm not afraid to do it, publicly. And just a few comments. So Reginald said, I appreciate you. You've been very key in my trading journey. I appreciate that, man. I really do appreciate that. And then I'm going to go out on that note. As you can see, my battery is dying. So people, until next week, please don't forget to press the like button. Share this, man. Share this with somebody. Share this with your trading community. Share this with your trading friends, because I think it's very valuable and they can learn something. And again, don't forget to subscribe. Don't forget to tune in next week, 7:30. We'll be back again. As always, y'all stay blessed and peace out.